So today is February 1st, 2017, and we're looking at the Emini S&P daily chart. And we have the ability through the indicators that we've put together to make predictions about where the market will go next. And those predictions involve a timing component. So most of the indicators that you had before you had the software were primarily focused on price. Most of the bounded and unbounded technical indicators you were referencing were measuring a value in relation to price movement. So these indicators, when you're using them, you have to remember they're being measured in relation to time. And there are some tremendous benefits associated with via these NinjaTrader indicators to referencing things in relation to time. And I want to walk you through how this one particular indicator has been working on a daily time frame. So we've got the Flux daily cycle marker tool here. So for some of you that purchased the professional package, there's one tier above you for those traders that are using sort of these longer term swing trades, anywhere from 3 to 5 to 7 or more days, are using and leveraging the Flux daily cycle marker tool in their analyses. And so we're starting off every morning looking at the higher time frames. The daily cycle marker tool is relatively unique in that there are no histograms associated with it. Instead, it tracks a 90-degree phase cycle. So think of that like a basketball game or a hockey game where they break the overall time up into different periods. And so in this case, the 4 quarters or the 4 phases that we track are phase 1, a phase 2, a phase 3, and a phase 4. The phase 1 on our chart is always represented by a small green dot, or at least the way I've got it set up. Of course, these are adjustable values, and you can change the sizes and colors of everything. The phase 2 on our chart is represented by a large green dot. The phase 3 is represented by a small red dot. You see where we're going here. And the phase 4 is represented by a large red dot. And that's the Flux daily cycle marker tool in a nutshell. We are continually moving from one phase to the next, to the next, to the next. And the banks are tracking along these energy cycles. So think of it like anything else in nature. There's a period of growth. Think of this as sort of spring and summer, and then we have fall and winter. Okay, you have a series of movements that are choreographed based on this energy cycle in the markets. You could think of it as incoming tide and an outgoing tide if you've ever lived near the shore or a coastal city or traveled via boat anywhere where you had to pay attention to the tides. And like everything in life, there's a natural rhythm. There's along the lines of other things you've learned, correlations between the natural phenomenon around us, like the those of you that studied Fibonacci and the golden number and how that relates to cycles in nature and cycles in the market, those same things apply here. Markets are just merely outward manifestations of a physiological or a psychological behavior pattern. And in this case, you have millions of traders sort of working together as one giant organism. Only most most of the retail traders are not keyed in onto this cycle. They're trading very spastically. They're not sure what to do, and they're watching these lagging technical NinjaTrader indicators versus a predictive time cycle tool. So one of the things we can start to surmise looking at the chart is that different phases share very unique characteristics in relation to what happens when we come upon them, right? And you'll find this carries over and across down through our intraday flux analyses. When we arrive upon a certain energy cycle or a certain color dot in this case, we can see that these phases share some relatively unique characteristics. For example, if we look back on the Emini S&P and we're looking at the March contract here of 2017, we'll see via this NinjaTrader indicator that a phase 4 generally produces a bearish behavior pattern. The market tends to either stop rising as quickly and consolidate, or put in a substantial retracement to the downside. And that's an empirical observation, but one that is consistent across the span of the last year. And so one of the things we can determine from that is when we're waiting for a phase 4, we know, generally speaking, this is a bearish cycle. This is the winter. Now is the winter of our discontent, right? That famous literary quote. And vice versa. When we look at the phase 2s, we find that they share a common empirical attribute. They tend to do something. They tend to inspire trading to the buy side. They tend to induce, in the span of that energy cycle, a feeling of contentment, a feeling that everything is going to be okay for a while, a feeling of safety, that it's safe to purchase stocks and that we're all in agreement together that the markets will go higher for a while. You can sort of hear that old time song, Happy Days Are Here Again, right? These post-World War celebratory songs. That's what's physiologically playing during these energy cycles in our brains. And so the banks key in on that, and they realize it doesn't take much energy to get most of the retail traders pointing in an upward direction. And so when we arrive at the phase 2 event, it's generally a bullish period of time. Okay? If we look at the minor cycles, the phase 1 and the phase 3, we'll find that the same things tend to occur. If we shift our focus to the phase 3s, I'll just change these arrows. And one of the things you'll start to notice on phase 3s and phase 1s is their tendency to be a punctuated move. They're very rarely in the middle of an up move or a down move. They tend to be the absolute high or the absolute low a lot of the times, way more than half of the time. And if we spent hours going through each one of these signals, you would see that a phase 3, like its larger supernova partner here, a phase 3 signal is bearish, but it also tends to be a top. And then vice versa. When you use this in your NinjaTrader indicators, you tend to see that a phase 1 cycle in the markets, whether it's futures or forex or equities, whichever instrument you're analyzing with this, it tends to be a bottom, also bullish, like its larger supernova green cousin here. And so that's a very important observation. And whether you're using the histograms and the time cycle markers to observe these behaviors, or you're using the daily cycle markers in this case, it's very important to take a few moments rather than sort of burst right in on the scene and start trading and get a feel for the rhythm and the movements between the signals that you're following. You're in a very real way, you're observing a living, breathing creature. But the creature in this case is the markets. And so we look at these cycles across time to get a feel for and garner a sense of what's coming up next. And one of the ways that we're able to accomplish that is through the predictive algorithm of the time cycle software. So in the upper right hand corner of our screen, we see that there's a sentence that carries with it a prediction. And this sentence tells us, as of today, that the next event is a phase 1 event, and that it will arrive in 1 day and 15 hours. So 24, 34, 39 hours from now, we will be arriving at one of these. So we have been moving from here to here, here to here, here to the 4, and now we're just coming in to the phase 1. Okay, so that's important to understand when we're watching and looking forward out into the markets, because we've already established that a phase 1 signal carries with it this very observable, very repeated characteristic. It tends to be a push upwards. Picture a child bouncing on a trampoline. It tends to be that moment where when the trampoline was flat, the child has jumped down and the trampoline has sunken down and it's getting ready to explode upwards. That's what we're moving into in this case. So whatever market we're watching, from our observations of these phases in this market, we see that as we come into the next 39 hours, that there's a tendency now for the market to go higher. So that's the first level of analysis we can perform using this leading technical indicator for NinjaTrader. I'm going to take everything we've drawn off the screen, and I want to show you something else. This is sort of the next level or the next phase of where we can take the software. As you remember from our earlier classes and even from our YouTube videos, we have been tracking something I refer to as a constellation analysis. A constellation analysis involves the idea that the markets are exhibiting time-based patterns the same way they exhibit price-based patterns. And again, this study will carry over across and down to lower time frames eventually. It's easier to see it, I believe, on higher time frames because there are fewer signals to analyze over the course of one screen. And so in your prior life, we were taught by other vendors to look for price action based patterns. So if we saw this, many of you would recognize that as a head and shoulders pattern. That's one of the patterns that I was taught when we first started trading. Many of you would see this as a double top formation, and vice versa, a double bottom formation. These are all, in essence, constellations. If you think of them as points in the sky that we would look at night, like a star. Okay, they all have their respective pivots, and once we know the pivots, we draw the lines, and much like the Big Dipper or the Southern Cross or Orion, Cassiopeia, we see these patterns, and we sort of know in these combinations of pivots and in relation to one another in those combinations of pivots, what the market is generally expected to do. So in the case of a double top, we expect it to go down. In the case of a head and shoulders pattern, we expect a retest and a fail. In the case of a double bottom, we expect the market to rise higher. Well, one of the discoveries that we've made here at Back to the Future Trading involves the idea of constellation analysis. And I want to direct your attention to a pattern that we've seen before, back in July and August of this year. And I'm going to highlight that area so that we can see, in fact, what took place then in relation to what's taking place now. We covered this last week, but I want to spend a few minutes each week looking at this until we've had an opportunity to really delve down into it and identify some key characteristics you can use throughout the week when I'm not here helping. When we go back in August and July, you'll see that there were some very unique characteristics shared across the two patterns that we're looking at here. Number one, at the beginning of this constellation, we start with a phase one in both quadrants. That phase one drives us up into a consolidation range in both quadrants. The phase two signal, in this case, the day after, was a higher high close. In this constellation, the phase two signal was the higher high close. We see that the phase three signal was the higher high in both constellations. And then a very unique hallmark between the two patterns. The phase four was a hard sell-off day, followed by a reversal and a pivot to the upside. And so you'll see here that we have this really unique fingerprint, a time fingerprint, if you will, that's being shared across the two patterns. The market then retraces down into the phase four and moves up into a new consolidation phase. Okay? So you can see there's a step up that takes place. And now those phases behave similarly across the first constellation and the second constellation. So here's the consolidation phase on the second echo of this pattern. Here's the consolidation phase of the first echo of this pattern. And again, you can very easily see the correlation between the four phases in each of these two constellations, in each of these two echoes. The banks are following a play. We're getting ready to watch the Super Bowl here this Sunday. I've got people coming over to my house. We're going to sit and watch a game. But we all know when we sit to watch the game that the players have been playing and practicing their plays. Okay, what are we going to do when we see this happen? What are we going to do when it's halftime? What are we going to do with the open? How aggressive are we going to be with the ball? And everything you think in terms of practicing a play for a game, whether it's American football, European football, soccer, everyone is practicing what they're going to do. They're rehearsing. And then when game time comes, they play out what they were practicing to do. And you can see across both of these patterns that there were some really similar striking correlations. The banks were running this play. This, I believe, is a established play, because if you look where the price levels are, here's 21.50, here's 21.75. These are big psychological round numbers to the market makers. Okay, so first consolidation phase is at 21.50. Second consolidation phase is at 21.75. Now, watch up here. In the echo, the first consolidation phase is at 22.50. The second consolidation phase is at 22.75. Is that a coincidence? Maybe. Or maybe not. Maybe this is the play that the banks run when we're forming an all-time high. Maybe this is the play the banks run when they're forming an all-time high. So the patterns were identical up until this last phase. Up until this last phase. And then things went awry. Such a great word. Let's go ahead and use a golden rectangle to highlight the differences between the left side and the right side. Okay. One of the things that I've pointed out, and I will continue to point out over the next weeks and months and probably years, the way things in my longer term analysis is looking, the Trump rally, any bearish signals are diminished in strength. So I'll say that again. On this side of the election, any place that I've been analyzing a pullback should take place, and I've theorized how big the pullback to the downside should be, it has almost always been weaker than my expectation. There is an enthusiasm and force in this cycle that I haven't seen recently. And so when we arrived at the phase 4, we were waiting for a stop run. So those of you watching me right now, I want you to see in the first echo, the first constellation, we had a prior swing to the left, and then after the phase 4, there was a stop run. This is historically one of the most useful mechanisms, one of the most useful tools that the banks have available to them. It leads traders into a false start and gives banks the absolute tippy top price to sell at. Well, we didn't have the breakout in the echo. You'll notice here that the breakout occurs one candle after we were expecting it to occur. And so they shifted everything on the right hand side, and now we've fallen down. So they used this candle as the stop instead of this candle to the right of the phase 4. So in the prior pattern, the phase 4 was a low. In this pattern, the phase 4 was a high. And that's very interesting to me, because something is different. And that means to me, those of you asking the question over here, what happened with the phase 4 inverting on the left but not on the right. It tells me something's different, and it makes me recalibrate. How many of you, when you're driving in your car, you look at the GPS on your phone or your Garmin on the windshield, and you accidentally make a wrong turn, or you turn off an exit too early or an exit too late? It will generally flash a word at you. How many of you know what that word is? All right, when you go off the beaten path, it'll say recalculating. Recalculating a new path. Okay, so I want to show you what I'm thinking about today, and you could go back and do your own research and see if this is something you agree with or not. When I get rid of all of our tools except the rectangle, I know that the phase 1 is coming up next. I know that the phase 1 is coming up next. Okay, this is the Obama echo. This is the Obama administration echo, and we are way below the consolidation phase, the upper plateau here. This is the Trump echo, and you can see that we're not even below it. We're up it. We're up above it, rather. And this phase 1 signal is coming next. And the last 2 days have been upthrust candles, meaning the wick of those candles are extending down into the consolidation phase. Think of it like stretching a rubber band and releasing it upwards into the sky. So my focus has now shifted, and I'm looking in particular at that square right there. And I'm looking in the night sky of the markets to find a pattern now that's similar to what's transpiring on our screens. And this constellation has 4 stars. This constellation that I want to explore with you has 4 stars. There's a star in the lower corner here. There's a star here. There's a star here. And there's a star here. That's where the phases are being drawn. And so I can almost take a line and connect my dots. Right? I have a consolidation phase, and then I have a check mark through it. Everybody see that? I have a consolidation phase, and then I have this sort of check mark through it. Think of that like an election where you check off which candidate you want to elect. This is a pattern that I'm interested in. And so what I'd like to do is go back in this same market and discover if I can find any place where I've seen that pattern before. So one of the things I'm going to do is make sure I have a boatload of data loaded. I had a year's worth of end of day bars, and now I have as much as the computer will give me. As I cycle back, I want to see if I can find this pattern. So one of the things I'm going to do is I'm going to open a second daily cycle marker chart. And I really recommend, if you have the software, that you try this. Okay. I think it's a fairly fruitful endeavor, and will start to create an awareness in you of the patterns of this market. Okay, so I'm going to start to go back, and one of the things I want you to look for, one of the things I'd like for you to look for, customers watching, I want you to look for that characteristic rectangle right here, and then look for the red dot that sort of pops above it. And let's see if we can find one of those. Let's see if we can find a little red dot consolidation phase, and then a red dot that pops above. Okay? I bet this isn't the first time this has happened. And I quite honestly, truly don't know what we're going to find or where we're going to see it. But I want to go back to a time where we had this topping pattern with an upthrust candle to the right of the consolidation phase. And I'm banking on the markets having done this before. Okay. So can everyone see here on my screen? There's the first iteration of what I think is taking place here. I have a consolidation phase, and then I have a red dot that pops up above. Can everyone see that? So if we use our constellation efforts, I have a dot, a dot, a dot, and a dot. And if I connect them, can you see how they look like a check mark right there? Okay. And I do have a consolidation phase here. So while not an identical example, it does meet the geometrical conditions that we have placed on this constellation. And so I'm looking first and now to see what usually happens between the phase 4 and the phase 1. Between the phase 4 and the phase 1 back in May of 2015, there was a retracement. That retracement took us from a high to a low of about $41. But more importantly, look, if we look to the left and measure the height of the consolidation, these are the bars to the left of where we were. You'll see that this retracement pulls back halfway into the prior consolidation phase. Let me repeat that. From the phase 4 to the phase 1, the market pulls back using the bodies of the candles. The market pulls back approximately halfway between the high and the low of the bodies of the candles of this check mark box that we described in our consolidation phase. And so what's interesting to me on the right hand side, if we look at the chart that we were studying currently in the present time, is if we use that same technique with the bodies of the candles, can you see that we've pulled back into, it's a much tighter area, but we're at the same points coming up into the phase 1. So that's the first thing that I notice. The second thing that I notice is that there is, in this echo of that pattern, there is a slide. The market is sliding down from the phase 4. And I'm just going to cover up that pattern that way. There is a pronounced trend line in this pattern that comes all the way down to here. And so it appears from the phase 1 to the phase 2 to the phase 3 that there's a continual lowering of price, that price tends to fall. But remember what I said about the Trump rally. Any place where there's been a bearish impetus in the past, it's been lightly bearish. It's like diet retracement with Trump. There's not a lot of gusto or selling sugar in those moves. And so there are two very important things I want to point out. In this echo, in the past echo, the phase 1 does produce a move up. In this echo, the phase 2 does produce a move up, albeit a smaller one than the phase 1. So when we get to that phase 1 day, that market moves up 20 points. When we got to that phase 2 day, over 2 days, the market moved up 15 points. So $35 with those 2 different days. One of the things that will be extremely important to watch as we come into the next phase 3 day here in several weeks, if we get to this point and customers, this is inverted the way it was in our previous constellation. If we get to a lower low at this phase 3, that has the most potential for us to launch higher, according to this echo of the pattern, going up $36 in the past. So that's one example of an echo of that constellation. We found one check mark pattern so far, going back to May of 2015. There's our check mark. There's our box. Here's our check mark. Here's our box. Your brain is really good at finding these patterns. And so as you scroll back, autofocus your chart and practice looking for other versions of that signal. Practice looking for other iterations of that signal, because they're everywhere. And it won't take us very long to go back and discover other versions of that same pattern. In this case, I see something remotely similar. I see a consolidation pattern. But I would suggest to you, what if we take, sometimes there's a dot that occurs on a Monday or a Friday where a weekend was involved. What if we take this red dot here, cover it up, and we put the red dot up top? Can everyone see that this pattern bears some resemblance to the one on the right side right now? Let's draw the constellation. There's our check mark. There's our box. Everyone see that? Okay, so sometimes there can be a weekend that causes the dot to appear on a Friday where it might better be suited on a Monday, depending on where the energy cycle fell. And so it's unique because if you look on the left, there is in fact a doji candle up here. And so over on the right hand side, you'll see there's a doji candle here as well. So we're close. We see similarities between the two patterns. But now look what happens at the phase 1. The phase 1, when we get there, is again an explosive growth candle. This is pre-Trump. This is back in the Obama administration. That was a $30 move. And then when we got to the phase 2, from the open of that day to the close of the next phase 3, was a $50 move. So we're seeing again anywhere between a $20 and a $30 move up when we get to the phase 1. So there are 2 examples of this echo pattern that we've seen back into the past. The present one, the one in 2015, and now this one in March of 2014. And so I would encourage those of you that have this version of the NinjaTrader indicator to spend a little more time and just travel back in time and see how many times can you see that pattern. Here's another version of that same signal. And you'll notice after a while it gets easier to spot them once you start looking. Here's our consolidation pattern. Here's our check mark. Not quite the same though, is it? Nope. So we don't have a hook here. We were hoping that the green dot was up here and the next green dot was down there. So when the constellation doesn't look the same, scrap it. Move on. Don't try to force a pattern to look like one that it isn't. We'll see if we can find one more here together. I think that would be fun. Maybe pushing our luck. But we'll try. And we will see what we can find. Any questions about what we've been doing here so far in relation to understanding what the banks are doing and trying to disseminate what they're doing next? Okay, this isn't one that we've seen from that last pattern back. I don't see any new ones, but maybe you guys do. Here's a version of it. Not quite as pronounced, but my eye catches just speaking out loud so you can see where I'm thinking. Little green dot, big green dot, little red dot, big red dot. Everybody see that there? There's the check mark pattern. Again, watch what happens at the phase 1. Watch what happens at the phase 2. And can everyone see the stereotypical slide? There's our slide down from the phase 4. Okay. So when we use these patterns and we understand what's occurring as we get to them, we can then start to come over to the right and say, well, what do we expect to see over here? If history is any indication, we know that there's this slide pattern, right, that generally occurs to the right of here. The phase 1 is coming in a day and 15 hours. We know that the phase 1s generally produce a $20 to $30 move. We know the phase 2s are also bullish, but historically push up less high, lower than their predecessors, the phase 1. And so looking at our check mark pattern and then cross-referencing our other constellation that we were looking at before, coming into the phase 1 historically has a very bullish tendency. And then coming into the phase 2, equally so, but perhaps not as big at first as the phase 1. So that's our Emini S&P daily bar analysis using the Flux daily cycle marker predictive NinjaTrader indicator. We'll circle back here next week and see how all of that played out.